walk you through some trades using this 1-minute Ichimoku Cloud strategy. And in this video, I'm going to be coping with trade management using some martingales. Yes, it is a high accuracy strategy, but let's say if you want to do martingales with this, I'm going to be showing you how to do that in this video, so stay tuned. So once again, I want to recap a couple of things. The chart is a 5 seconds chart, and then the Ichimoku Cloud, in other words known as the Ichimoku Kinko Hyo, is on default settings, and you can find those default settings right here. It's on default settings. Styles, I've hidden the Tenkan line, I've hidden the Chikou span, and all I have left is the Kijun Sen. We're using that, span A and span B. The charts are kind of glitchy today. I think it's a JavaScript problem or something like that. And so in this video, I want to basically show you some trades first before we progress on to lower time frame, more high intensity, high frequency trading, so that you guys can get understanding of this one first. I have the MACD on defaults for visualization. So once it comes out of the other side of the no trade zone, in other words, the cloud made up by span A and span B, we will take the trade. And if the trade loses in a minute, we will take trade in opposite direction, for a double in the martingale. So this has proven to be highly accurate. So martingale is going to be very minimum. So we're going to wait for this to come out, and there is our entry right there. It's our first trade. Why I recommend doing it this way, because 1 minute is a good starting point. It's not too fast, not too slow. But let's say 5 second, 15 second can be kind of hectic, so this would give you more time. And again, we're working on OTC because OTC charts offer the best payouts. And the charts are actually much better for technical analysis compared to, say, the regular charts that can be kind of sketchy. You have price gaps and all kinds of stuff that makes it a little bit messy for trading. Okay, so just coming back in to see how this one is really good, which means that we have to switch to a different pair for the next one, because it's going to take some time before we have another trade. By the way, if you want to reduce possible loss situations or martingales, one of the things I can recommend for you is that you may want to stay away from sections of the chart like this part right here in the middle of my screen. What's wrong with this is that this part, you can see the MACD is very thin, so volume is very low, and the MACD moving average lines are bunched together, so that would actually mean that the price is very thin at that point of time. So try to avoid that, and also look out for remember my video about trend lines and trend lines trading? I did some support lines, etc. So if you have prices forming like a resistance level, you want to avoid those resistance levels, because it's going to make it a bit harder to have a good breakout. It's best when it's trending. Avoid spots like this, and those are the parts where the volume is just so thin it's not even worth looking at. So this one's quite close to coming on the other side, and I hope to be able to show you some situations where we end up martingale the thing. Usually from this strategy, if you see that it goes into the cloud, more often than not it'll come out on the other side. Very rarely it comes out of the cloud again, but if it does, we can still take it as well. So waiting for this to come out on the other side. I also noticed that we have a little bit of a horizontal resistance here, so I just wanted to discuss that. We want it to break clear of this resistance, and that would make it a better trade opportunity. So I'd like for it to come out and above this line. So there could be a situation that will require some martingale. If it still stays inside of here, it comes out and stays beneath here, it might turn against. Just saying. Alright, it's broken beneath, and that may be a further downward continuation. So let's monitor for the result. Alright, that was quite close. So we're going to double up for the next one, and I will just click double up here, number. So wait for it to come up to the upside. If it closes above here, there's still some space between here and there, so we're gonna wait for that. Okay, wait, we're coming quite close to that. And even if it breaks out, there's a huge amount of distance in between, so that's good for us. Alright, so it's kind of like building up, consolidating for a breakout, and here we have the breakout. Taking note that over here, the MACD is not stuck close to the line. So just as I have predicted, and like I said, what I really like about the OTC and pocket option is that you can actually do technical analysis on it. It is highly logical. It's not price that just jumps around all over the place to kind of like screw you over, you know. I'm going to double up again, just in case. Still above. The reason why I think that the 1 minute expiry is ideal is because if it is a trend, it will continue the trend. If it is not a trend, it will rebound. It's going to swing across anyway. So it's like shortening expiry is not going to help. 15 seconds is not going to make it win. And it will still do what it will need to do anyways. So, you know, you can actually do it this way. It's quite, I would say, very reliable. All right, there we are. So once you win, you can go over to the initial trade size once again. Highly manageable. So let's go to a different pair and try this again. All right. You are not limited to currencies. You can also do this on stocks. So we have one right here. Let's go for it. All right, we can start looking for another trade. Just missed this one. We are close to a change of trend here. So we already have this in Elliot wave theory. This is the ABC swing, the corrective swing, and it's setting up for a new series once it comes out the top side. Almost ready. Quickly check. Do all move fast. I'm seeing a triangle formation over here, and I will tell you that these are not so recommended. It's thinning out, and also there's a triangle formation forming. So try to avoid these kind of setups when you can, to avoid having to go through unnecessary martingales. And what I liked about this one, the point when I went in is it actually went above the breakout point. So there was this point I was looking at that is forming, you know, a consolidation triangle, but because it went above that, okay, let's say just do it. My theory has always been avoid a level of martingale wherever you can. So if you think it's going to lose, then don't do it. So we increased our chances of winning by waiting for that confluence point, which is here. So again, we can look at a different one. Let's go to indices. No, it's a bit crap payout. So we can check commodities too. This trends very well. And the reason why I say, you know, the martingale thing is kind of, it's actually very safe. Why? Because you see, the only time it would go in and out of the bands in a short span of time is when it's gathering momentum in between swings. So in between those Elliot wave swings, there's those ABC movements. These are those ABC movements. There you go. Take this one. Similar, I see it's like a triangle breakout. Okay. So when am I talking about triangle breakout? I'm talking about this. You can obviously imagine the bottom of the triangle, right? So this is like one side of it, and that's the bottom side. And if you would like to learn about binary options, highly recommend you click that link in the video description and receive my email course. Totally free, and I've structured some of my best content on my blog and also my YouTube videos. I've sequenced it into a daily sequence of emails that will help you out boost up your trading. Alright, so this one finished in the red, and it seems to be consolidation. So in the meantime, I'm going to click on here, click the opposite side. I'm going to wait for one of two things to happen. So in this case, what happened here was that it went in and came out. So we'd actually take the trade in the positive direction again. In rare situations, when it goes into the cloud and comes out, then this is how you do it. So that's why I really wanted you to see different scenarios that can possibly happen. So I hope you've taken the time to watch this video and the various situations that have happened, multiple scenarios. This is just like one take. If you have any questions, you're most welcome to ask in the comments down below. And if you want to see another video of this on the lower time frame, okay, so lower expiry, give me 10 likes on this video and I'll put that next video up. So all these were the trades from just now. Excellent wins, and I hope this is a great tutorial for you. and puts you in the right direction, gives you more confidence to start testing. So you've already done some testing yet. There's really no reason why you shouldn't. So go ahead, click the link in the description, open yourself a pocket option account, and then you can try it out. You're gonna see that this works. Then put in some money, make some money, and withdraw profits. Spend it, feel good about yourself, feel good about how you're able to change your life through binary options trading. And even if you had bad experiences in binary options in the past, like sometimes you may have like some kind of idea that, oh, it's dangerous, blah, blah, but once you know that if you got the correct method and the right approach of doing it, the right money management, the right mindset, you can actually go a very far way. So this is one last trade, and this one I'm actually doing it because it's beneath the trend line. I'm looking to the trend line as a reference point. If it goes above, we just take it opposite direction. I don't necessarily have to wait for it to close. I can just take it right away. So I've always mentioned a concept that the price likes to come back to touch the trend line and the support. This is what people call stop hunting. Very common phenomenon in trading when the big players, basically try to squeeze out people's stop losses. It's interesting how in the synthetic market this can happen too, but you know what? You're covered. So in this method, you're well covered against that. That's one more win. So there's really no reason why you shouldn't be doing this already. So spend half an hour, just go ahead and do some trading right now on this method and let me know how well you do. Thanks for watching.